It's time for Apple Farm Chatter, your podcast for all things Apple Farm Service, the latest ag news, dealership events, and upcoming trends. Put on your work clothes. Apple Farm Chatter begins now.
Hello and welcome to another episode of Apple Farm Chatter. Kent Holmes here with Travis Wolf. How are you doing, Travis?
Well, a little exaggerated, but we've had a busy day so far, so this is only going to be a fantastic podcast.
We've had some technical issues, but we're up and running. We're here with our guest today, David Booth. He's a financial sales manager from C&H. For those of you who don't know, C&H, Case New Holland, combined together, C&H Capital. So Dave is joining us as the financial sales manager for Indiana and Ohio. Thank you for joining us today.
Yeah, absolutely. Thanks for having me on.
And we also have Karen Petty. Karen is our amazing guru of finance here at Apple Farm Service out of Covington. And if you can't get the hint today, we are talking financing, leases, and extended warranties.
Wait, we are?
We are. Here's this.
Well, this would have been nice to have beforehand.
Sorry. But thank you so much for joining us. Thank you, Karen, for last minute letting us grab you from your office. And we appreciate you spending some time with us.
Absolutely.
So I guess we have a lot of questions when it comes to money and when it comes to how we should spend our money and cash flow the best when it comes to equipment. You can look around and times are a little bit tough right now. Grain prices aren't as good as it should, we always want grain prices to be better, right? Absolutely, but it's in a slump right now and trying to cash flow a little bit better. So we thought this would be a good time to talk about financing, leases, warranties, all the above. So I guess the first one, we want to talk about leasing. And I guess we can start with you, David. I mean, why would people want to look at leasing for their equipment?
Sure. So the lease product is something that's been around for some time. The popularity tends to come and go just based on all sorts of different things, with the markets and type of equipment that the customer is looking for. But, to go back, in its most basic form, a lease is simply an agreement between an owner and a customer in usage in return for payment. And that's its most basic form. So when we look at leasing equipment in this instance, that's really what it is. So you take the purchase price of the equipment, and you're going to look at what's the customer going to use it for, what's the usage, how many hours. One customer might only need 200 hours a year, where another customer might need 400, 500, 600 hours a year. Okay, so based on that, the terms are typically a 2 to 5 year cycle on that. They're going to determine a value of what that equipment's going to be worth at the end of that time period. And so that's going to be kind of on the back end, and that's going to be what's typically called the purchase option for the customer in that scenario. So based off of that, you're gonna figure a payment for that usage, and that's what the customer is going to agree to pay.
Okay. And I guess, Karen, you were the one here that has to do the most with leases. I guess where have you seen where leases, the customers that come in, what's best for them? Why would they choose a lease?
Well, I mean, some customers, do use the equipment temporarily or for a shorter term, and they turn around, maybe they buy a new one every 6 months. So in that case, a lease might be a good option for that.
Okay. And I know I was looking at, because you were mentioning what works best for them, and I know you had a flyer that you sent out to some of the dealerships when it comes to leasing, and it makes sense, because I'm looking at an example here that you have, because you mentioned terms, and you said, what's the highest you can go on them?
As far as length of time?
Yeah.
Typically 5 years. You can push it maybe a little bit longer than that, but typically about 5 years is the longest lease that we're going to look at. Okay,
because I know, you gave an example. You had one that was a Farmall 75A, and of course you can lease any piece of equipment. So it's just an example, but they're given here that if you were to do 400 hours a year, which that's quite a bit, especially for something like a Farmall, they're showing the monthly payment, from this example at $596 a month, if you do that, and that's really flexible compared to that buying it without the lease is going to be a little bit more than that. So I guess the next question would be, there's kind of I know on the auto side, there's definitely a stigma when it comes to leasing. That is, you lease if you have to, but it's it doesn't show good. You don't, if you're at the coffee shop and you say lease, I lease my car, it's kind of frowned upon. And I guess for the equipment side, why do you think is there a stigma like there is when you lease an auto for farm equipment?
I wouldn't say there's a stigma. I think it's more just an understanding what that lease agreement entails. Again, it goes back to the usage and what they want to use it for. So here's an example for where maybe a lease would make sense. Say you've got an operation that is looking, they're going to expand. Okay, so they're going to expand. They've got a contract. Say this contract that they've got to expand is only good for 3 years. In order to complete this expansion, they're going to need another tractor. But they don't know after 3 years if they're going to continue to have this additional need or if they're going to go back to their original size. So a lease gives that situation the flexibility to say, hey, we can get this new tractor that we need. It can perform the jobs that we do, whether it's planting, harvesting, whatever they want to do with it. Come the end of the 3 years, if they don't continue down that path and they don't need the tractor, they can let it come back. And that's our typical lease. It's called an operating lease, commonly called a walk-away lease, where the customer has the option at the end to let the equipment come back, or the dealer can purchase it if the customer doesn't want to. But that's where it gives that flexibility to the customer to do that. If they're going to make a retail purchase in that situation, which they could, they're going to have that equipment. It's theirs. So they'd either have to sell it at that point or find another use for it. Whereas in this scenario, they can kind of start fresh.
Okay. And I guess, Karen, we've had customers that have gotten leases, and at the end of the lease, if they decide they want to purchase that tractor or that machine, how does that work? Do they normally get a discount for that, or what have you seen?
It's not necessarily a discount. It is just the pricing, again, about how much they've used it. And then they do also have an option of then if they're going to purchase it, they can actually do an actual financing and turn that into just a typical loan to where they can pay their annual payments or semi-annual, quarterly, or monthly.
Okay, but kind of what it sounds like, if they put hours on the tractor and they're buying it, then when we're figuring out price, the hours do account towards it.
Right.
Okay, so it would be, you put some hours on it. It's not like you're having to buy it as if it's a brand. The price is actually brand new with 0 hours. You're going to be able to get, help out that way.
Right.
Okay, no, that's good to know.
And that's another scenario where it gives, say, a different situation where a customer does intend to own that piece of equipment for a longer period of time. They could do that 3-year lease. Maybe it's a cash flow. They're going to have a lower payment, right? Because of the example you gave on the farm. They've got a lower payment up front. The lease comes due and they say, yes, we want to purchase it. Then they could turn around and purchase it for that residual amount for another 4 or 5 years. Or they could even release it if they want to do that. So it allows them to kind of stretch that purchase out over time and keep those lower payments.
Okay. And I know a lot of young farmers, if they're listening to this and they're saying, if I want to get into leasing to start off with, I guess one question they might have, if you lease something, how does it affect your credit? Would it help credit? How does that work out for some of the farmers that are getting started that need to build credit?
Sure, yeah. So as far as we're concerned, as far as CNH Capital is concerned, leasing is going to be looked at, the same as a retail as far as building the credit, right? Which is really all around, making your payments on time, paying as agreed. Those are the kind of things that are going to build your credit. So from our standpoint, I can't speak for everybody, but from our standpoint, as long as we're paid as agreed to, then that's what's going to show. Now, typically, you've got to have a little bit stronger credit to lease initially because there is more risk involved. So financial institutions, it's all about risk. So who's going to carry the risk? So if we're continuing to own that equipment and someone else is going to use it, it's a little bit more risky for us in that situation.
Okay. And then if I'm leasing this machine, Karen, what happens if something breaks while I'm leasing the machine? Like if it's something like has an issue with it, is there warranty included when I lease something?
You have your yes, there's warranty included. You have your warranty for the term that the base warranty is good for, which depends on the particular piece of equipment, how long that is.
Okay. And then, David, what are the terms like for at least for warranty then if I lease something?
Yeah, so your base warranty for the machine is going to be for the machine, whether you purchase it, lease it. I mean, that's not going to have anything to do or change with the factory base warranty. Now, there are options to include additional protection plans after that would come into play after the base warranty, and those are offered, and you can include those in the lease. So it's all kind of rolled into that. That would carry through the lease term, so that you would have coverage throughout the entire lease term.
Okay. Well, I think that covers a lot. Before we move on out of leasing, is there anything, Travis, you have questions on?
I mean, I'm honestly just learning along with everybody else at home. This is all kind of new to me, so. Although, we did have a friend that helped us out recently. He was very thorough in his explanations. Let's say good old Leroy. I think we actually have something from him, don't we?
Yeah, we do. Have you guys ever worked with Leroy on the leasing side?
I have not.
We know a friend of a friend. That's how we found out about Leroy. But
Those are the best.
Leroy has helped us out before with some leases and lease returns. So he asked if he could have a little message for us. We said, sure, friend of a friend. So here's a little note from our friend Leroy, the lawyer.
Are you having issues with your current partner in the field? Wishing you didn't sign up for that long-term commitment you thought you wanted? Hi, I'm Leroy, and I can help you out with that pesky problem. I specialize in leases and lease returns. Things happen. Life changes. Bada boom, bada bing. And sometimes it's time to say goodbye to that special someone of yours. Here's how it works. Here's Leroy's proven program for a new, happier life for yous. Step 1. You ditch your old friend. Is she costing you too much? Is the thought of keeping her around past the honeymoon stage scare you a little bit? It's fine. Why commit when you could set up for shorter terms, right? We work hand in hand with our friends to dispose of your old acquaintance the proper way, by getting you the most bang for your buck. Step 2. We find you a nice new model for you. Let us do the shopping for you. Gentlemen, we're talking brand new models with all the bells and whistles, you know what I mean? Get ready to make your friends jealous of your brand new field partner. Step 3, we signed you up for a short lease, so you don't have to keep her around for more than you need. Yeah, we're talking about 36 to 60 months, max. Then you can send her down the river. I mean, down the road for the next lucky farmer. She won't cost you an arm and a leg like your old ride either. In fact, we're talking lower payments. And she'll work for you. Up to 400 hours a year, you know what I mean? So here's you go. Leroy's 3-step program for a happier lease on life. And want to know the best part? You can keep it over and over and over again. I know a friend of a friend who ditched his old acquaintance at least 12 times. Yeah, he's never been happier. So call me today or stop by your local Apple Farm service and get your long-term commitment issues fixed today.
Thanks, Leroy.
What a guy.
What a guy. He's been a friend of a friend of a friend for a while for us.
And that's the appropriate distance we should have with him.
Well, it is, but...
Sounds like his distance is growing. It was a friend of a friend. Now it's a friend of a friend of a friend. He's moving down a little.
Yeah.
He understands what happened.
He understands, yeah. So I know, if it's all right, we're going to move on to financing. And I guess, Travis, I'll let you kind of handle the first question we have on financing for equipment.
All right, so what is the current market looking like? I know we kind of touched on it a little earlier, at least with one market, but what is it currently like, and why has it kind of gotten to this point?
Yeah, sure. So I can start there. You know, really all finance institutions were kind of tied to the Fed, right? So we see those announcements that come out every month or every couple months about what the Fed's doing with interest rates. And that's really what's driving all the banks and federal institutions as far as how they lend money. and that's what determines the interest rates that they can provide or that we can provide in those situations. So if we look at the end of 23, the Fed came out and said, hey, we're looking at 24, we're looking at lowering some rates throughout the year. But as we sit here about halfway through 2024, we haven't really seen that yet. So, they kind of said they were going to hold back. They hadn't seen what they wanted to see from inflation coming down. So I would say at this point we're looking, best case scenario maybe one or two if they're going to do what they said they were going to do and lower rates here for the rest of the year. That could even be a bit optimistic. Again, that's all based off of what they're seeing from the inflationary. So a long-winded answer to, we haven't seen a lot of change in rates here recently. We went through a year or two where rates were all over the place, mainly going up very quickly, which made it hard for our customers to plan their businesses. Thankfully, maybe they're not as low, the rates aren't as low as what they'd like to see. They have stabilized some. So you can kind of plan around that a little bit. Historically, rates are somewhat in line. If you look at a 20-year average, of a 5, 6, 7% interest rate, we're a little bit higher than that, but we're close. I think the prime rate I looked yesterday was about 8.5. So prime is typically what the standardized rate that a bank is going to lend at. And there's just typically about 3 points higher than the federal rate, which it's 5.5% or so. So that kind of holds true right now.
Okay. So from what you see, if you're farming, you're looking at financing a piece of equipment, you're waiting, when is the best time to be able to get a rate? What you're saying is you don't expect major increases, but you also don't see major decreases. You just see stability right now is what you see.
Yeah, I see somewhat stability in the rate market. I think the biggest thing is don't just think that all rates are high. One of the advantages that we have as a captive finance company, meaning we only lend money through our CNH dealers, is that we can use programs and promotion to provide lower rates on certain equipment. So if you're looking for a certain piece of equipment and you go to your bank, don't just assume that that's the same rate that you're going to get at your CNH dealer because you gave the example just a minute ago on the compact tractors. So both Case IH and New Holland compact tractors are 0% for 72 months right now. And you're not going to find that outside of your CNH deal or using CNH Capital. That's just kind of what we do. That's our business to do that. So, and there's all kinds of other offers out there for other products. So I think that's the biggest thing I would advise is if you're interested in a piece of equipment, ask about what the finance offers are. And don't just assume that it's an expensive rate.
Okay. I guess that question kind of goes to you, Karen, because you see customers, and with Apple Farm Service, we sell and finance everything. You're financing lawnmowers up to, these giant new combines at list price to $1 million. And so do you have any tips or advice for those that are looking as far as it's kind of a golden rule, certain types of equipment, looking at different options we have? And I know we also work with, our goal is to work with customers to be able to get what's going to be best for them. And so what's your advice as far as looking for financing between options we have or working with a local bank? What have you kind of seen?
Well, I would agree somewhat with David there that, you got to take into account that most places do have a promotional financing. So most places do have, depending on what you're buying, a 0% for X number of months. So just again, not to just assume that what your bank rate is what the rate you're going to get on a loan. You just have to check all the options out and work with the salesman to figure out what's your best financing opportunity.
Okay.
Now, like I said a little earlier, I am completely new to all this financing stuff. How does something in ag differ than like a car or home loan? Excuse me.
Like when it comes to financing, right?
Yeah, when it comes to financing.
Yeah.
Yeah. So I think the first thing that would come to my mind would be looking at the payment frequency. So that's one of the biggest things as an ag lender that we can do is to try to match the customer's payment with the way their income is coming in, right? So in farming, typically a lot of the income is coming in the fall at harvest at the end of the year. So we can structure the loans so that that's when the payments are due, and typically those are annual payments. So that would just be one payment per year. Whereas if you go to purchase a vehicle or a home and you want to make an annual payment, that's probably not going to happen. You're going to have a really good case to try to get that done. They're going to want you to make that payment every month. And we offer monthly payments too. We offer annual payments, quarterly payments. All those things are available, but annual payments are very typical in the ag industry. So that's probably one big difference that I would point out. The other thing is even seasonal. So, we do some light construction equipment too, and we'll offer what I call seasonal payments. So, maybe all the payments are made in the winter if it's a snow contractor, and then they skip some payments in the summer if they're not getting any revenue. We try to use our underwriters to work the special payment situations where we can, not everywhere, but where we can.
Okay, that's good to know. And I guess the last question we have on kind of our segment on financing, I think is Karen, since you have to go through and put the information for everybody to get approved here, do you have any advice for those that haven't done any financing before, whether on any type of equipment, kind of anything that you would recommend for someone getting ready to get financed for the first time?
I guess the only thing I would recommend is just to be prepared a little bit. Make sure when you're financing something, we do an application, and we do have to have a copy of driver's license. And if you're putting it in a farm name, typically if you're not having a guarantor, which is similar to a cosigner, then most financing companies are going to ask for your financials. So just be prepared to provide what documentation is ready to try to obtain a loan.
Okay. Now, we thought for those that are still new to financing, you guys remember Bill Nye the Science Guy?
I do.
You do?
Yep.
I'll say, did you know there are tons of knockoffs of them these days?
I do.
So we thought we found a gentleman called Will Fry, the farming guy, and we asked him if he could help us out with a video explaining how financing works in a simpler to understand way. So Will, thanks for producing this video for you. Here's Will Fry, the farming guy.
Will Fry, the farming guy. Will Fry, the farming guy.
Will.
Will Fry, the farming guy. Will Fry, the farming guy.
Hi, I'm Will Fry, and today's topic is...
Equipment interest rates.
So, what's with equipment interest rates, and why do they differ so much? Well, to show you the ups and downs, we thought we'd explain while on a roller coaster. You see, interest rates on equipment follows the ups and downs of federal interest rates and current economic conditions. When the federal interest rates is high, it costs the lender more to give, so they have to pass a little extra cost to you in higher rates. When the federal interest rates go down, it costs less to give, so they don't have to pass on higher rates. Whew. It also depends on current economic situations, kind of like a balancing act, which is why I'm at the United States Gymnastics Training Facility in Indianapolis. When business is good, finance companies can raise rates because customers can afford it. When business slows or is uncertain, finance companies can lower rates to stay competitive. It's all a balancing act to make sure the financial institutions don't collapse. So why is it that large equipment has a higher interest rate than smaller items? Why is it that lawn and garden items have 0% options, while combines and large tractors have anywhere from 5 to 10%? It all comes down to risk. Finance companies can offer 0% on smaller items because it won't be a huge loss if someone defaults on their loan. However, if someone defaults on $500,000 tractor, then that'd be a huge loss for the lender. Having interest on larger items gives the lender a little cash cushion if something happens. So, there it is, a little background on equipment and interest rates. Hope you've enjoyed this rate change ride.
Will Fry, the farming guy.
Will Fry, the farming guy.
Will.
Will Fry, the farming guy. Will Fry, the farming guy.
Will sounds a lot like you, Travis. You notice that?
A little. I'll say, when we went on that roller coaster record, something happened to my throat. I can't exactly explain what happened, but we sounded so similar that day.
I know. Well, thanks, Will, for your report and a little explanation on financing for those that wonder why does it work and why rates go up and down. So we thought we'd move on to the next section, extended warranty. And so, Travis, I think you have the first question on us.
Yeah, I do. All right, this is obviously aimed towards David, but why do extended warranty with CNH? I mean, you kind of touched on it a little bit earlier, but
Sure.
extrapolate, please.
Sure. Yeah. So, extended warranty is something that's been in the marketplace a lot of markets for a long time. The product that we use is actually called a protection plan. So, we call them a purchase protection plan for our equipment. But the real reason to do that is to cover yourself as the customer for any service repairs outside of base warranty. So, the equipment's going to come with a base warranty. Depending on the equipment, it's going to be a different length of time, hours, whatever. They're all different for each piece of equipment. But once that base warranty is up, any failures, service repairs, anything like that, it's going to be on the customer to pay for those at that point in time. So we offer the purchase protection plans basically as a we'll call it a buffer zone for the customer to help get those paid for in those scenarios. So there's all different kinds of coverages available. Travis, we've got 3 levels from Premier is kind of our top coverage. It's going to cover the most, and then a powertrain plus hydraulics coverage, and then a powertrain. So powertrain, if you're not familiar, is typically your more basic coverage. It's going to cover your driveline, your high dollar engines, transmissions, those types of things.
Okay. And I guess, Karen, for the customers that do have gotten them, kind of what's the process when they come to the Apple Farm Service and their dealership to receive it?
Actually, it's a really pretty simple process. They can, either talk to their salesperson or get a hold of myself, and we can quote the PPP, and is what we call it here. We just use those little abbreviations, and we can give them a quote to tell them what the Premier powertrain and hydraulics or just the powertrain coverage would cost them, and kind of go over and give them a guide of what each one of those options cover. And then they decide they want to purchase it. We just let them know how much it is, and we set it up, put the application in with CNH, and in no time at all, it's covered.
Okay. And I know we're talking about Case New Holland, which is a good majority of what we sell here, but we have a lot of other short lines. And I guess, Karen, is there a version of extended warranty for some of the other brands that we have?
There is. There's several brands. Several of the brands do offer an extended warranty coverage. Haven't seen a lot in my time here, just very few, and just a couple, I'd say a handful of the vendors that we deal with that we've actually provided some extended coverage from.
Okay. And then I guess another thing too, you're mentioning, actually before we started, David, that you can get these PPPs or extended warranties with leases too, can't you? And how does that work?
Yeah. So you can include it on a retail loan or piece. I mean, even if a customer just came in and paid in full for the equipment, you could add a purchase protection plan to it. But yeah, going back to your original question, we can include them on a lease as well. And there's some advantages for the customer to do that on a lease. If you take a look at a lease, the example we were talking about previous was like a 36-month lease. Maybe that equipment has a 1 or 2 year warranty. Well, in that second or third year, depending on which it has, you're going to be responsible for any service that equipment's going to take. So you can add that purchase protection plan on there. Some of the leases, actually, programs that are out now do include that as part of the lease. So those are available, but that really gives the customer the peace of mind that while they are leasing that equipment, that those repairs will be covered during that time period. So in fact, not to get too far down the line, there's also advantages that go to the customer for that, as far as increasing the residual value of that equipment, which is the purchase option. So the market has shown by including those that the equipment is worth more money at the end of the lease, or even if a customer is going to trade it in, if it still has coverage available. So we give them credit for that on the lease by increasing that residual value and lowering their payment at the same time.
Okay, so I guess that's good to know that if you get, for example, PPP on your Case New Holland equipment, if you decide, let's say you have a retail or you own it, you're not leasing it, and you still have coverage on it, or even if you return the lease and it still has coverage on it, that can be transferred over?
Yeah. So the coverage is transferable, so the coverage stays with the equipment. That's where it stays. It stays with that particular serial number, with that equipment, until that coverage expires, whether it's by hours or by length of time.
Okay. And I guess before we move on from the extended warranty, is there anything, Karen, that you wanted to mention about it, or?
Well, I was going to tell David that I really do appreciate his help with the PPPs because I'm learning myself. But you don't have to buy it right away when you're purchasing a new piece of equipment. You can purchase it anytime during the base warranty period, and you can also purchase it after the base warranty is expired. So there give some different options there for purchasing the extended warranty.
Oh, that's good to know. So, because I can see this being a common scenario, if I have a Magnum tractor and let's just say has a transmission issue, and it comes in and it's covered under warranty, after that claim, let's say it happens before that warranty time is over, even though I had a claim on it, I can still add PPP.
Yep.
Yeah, awesome. I mean, that's good to know that if you have it and you wipe the sweat off your brow because you had an issue, it got covered, good. It's not out of my pocket, and you realize it. I love this tractor, but if something like happens again, I really don't want to pay this amount out of pocket. Then you could add it then too. As long as that first year it still has that base warranty, you can add on PPP.
As long as it within the base warranty period, yes. And then also again, let's say you just bought a tractor, you got 2 years warranty, and your 2 years are up, and you decide, you know what, I should have bought that extended warranty. You just give us a call. We'll run it through.
Okay. And I guess we got just one other question, because anytime you talk about extended warranties, Travis, you're smiling. So what's the first thing you think of when you think of extended warranties?
Spam. More likely in the form of letters letting you know that your warranty is either expired or is about to.
Gonna say, and I guess we should be warned. I mean, I'm guessing they probably, if it doesn't come from CNH, then it would be spam. Would that be correct? I guess, how would you know that it is spam, David?
Yeah, I would say definitely look for something that's got the dealer, your dealer's letterhead on it, or something directly from CNH. I mean, there are campaigns out there that that get sent out from time to time if a machine comes out of base warranty, to let them know that, hey, now is your time. It's the most cost-effective time to add that protection plan. So, I mean, those are legitimate and those do exist, but definitely just look close, and you should see something from your dealer on that, or something from the manufacturer.
Something familiar to them.
Yeah, something familiar to them. And before we move on, I just wanted to hit on one last thing to kind of roll this all together. We talked about leasing, we talked about protection plans. This really goes back to just operating the equipment. So there is a type of customer out there that doesn't necessarily want to work on the equipment. They want to have a fixed cost. And so you start rolling all this stuff together, and that's kind of what you can build out for that customer. So if they lease it, they know what that payment is up front. It's going to be under warranty if they add the protection plan. And then we also have maintenance plans available that's going to cover, your regular services. So they can purchase that. That all goes into the loan, or the lease in this case. And so really the customer's only variable expense is fuel. So they know what the cost is to operate that. And I think of like a skid steer or a track loader or something where somebody's doing, residential or landscape or contract work. They really will know what their cost is on that equipment.
That is a very good point. Well, the reason why we brought up the extended warranty letters, because they are definitely out there. And you guys are smiling because you definitely remember that especially if you buy a vehicle, you sure know that you've only had the vehicle for 2 weeks, but yet somehow it's already out of warranty, right?
Right.
How does that work?
Did you find some sort of docu-series on this?
I did. There actually is a docu-series out there talking about the history of extended warranty letters. Have you guys heard of it?
I have not.
You have not? Well, we got the specific trailer just for it, so we thought you guys would like to take a listen.
A new riveting docu-series streaming on the History Channel this fall.
Ever since the beginning of time, they've always been there.
An in-depth look at one of the world's most notorious forms of communication, the expired extended warranty letter.
The letter predates well before the Postal Service was even a thought. Archaeologists even have evidence our earliest ancestors had a form of this communication.
Bark, bark.
Bok Bok, I believe your warranty is expired on your Mammoth. That can't be. I'm still making payments on my Mammoth.
An epic journey of mass marketing, annoyance, and frustration.
Many might not know this, but the very reason Marco Polo were sent wasn't for trade or spreading Christianity. It was to deliver an expired extended warranty letter to Kublai Khan. It was believed the warranty on his horse's hooves were almost over.
There's no more to the letter than meets the eye.
The warranty's expiring! The warranty's expiring!
Oh, I thought the code word was the British are coming.
With the Industrial Revolution came a huge change with the extended warranty letter. Mass production meant that there were more letters per capita in the United States compared to any other country. Finally, every person could receive a letter at least once a year.
Coming this fall, expired but not gone. The expired extended warranty story.
Attention, attention. We have breaking news from remote deserts in Nevada. We just received a strange communication signal from outer space.
Greetings, humankind. The warranty on your planet is running out, but there's still time to extend it.
The future of the expired warranty letter is looking brighter than ever and doesn't seem to slow down anytime soon.
Hi, I'm Captain John Edwards, Head of Intergalactic Communications in partnership with NASA. To this date, we're proud to say we have 16 expired warranty letters currently being delivered with our fleet of satellites in deep space. This is also in conjunction with our plan to build a future Casey's and Dollar Generals on Mars and the Moon.
Streaming on the History Channel app and Netflix September 16th.
It's a really riveting series. I don't know have you seen it yet?
Nah.
Nah?
Not yet. I'll say you sent it to me and I just kind of forgot about it.
Well, I sent it over and over and over again.
Yeah.
Just like the letters.
Yeah. I mean, kind of proof of what happens in practice.
You guys were smiling during that. Like you guys have never gotten one of those letters before. Well, I think we're getting to the end. I don't know, Travis, do you have any other questions for our guests today?
No. I'll say just thank both of you for the patience this morning.
Yes.
No problem.
And David, we always have a special gift for our guests on our podcast. So we just really appreciate you taking the time, spending some time with us. So we have just a special announcement for you.
We want to thank you for joining us on this episode of Apple Farm Chatter. We're so glad that we want to offer you a grand consolation prize. Your special prize is behind one of these 3 doors. Do you choose door 1, door 2,
you have to pick quick,
or door 3?
Door 1.
Door
Great
1.
choice.
Okay.
Let's see what's behind your door. It's a brand new solar-powered 8-digit calculator. This cheap Chinese generic calculator is a huge step up from the old abacus. Crunch numbers with advanced functions like multiplication, addition, and even division. Keep this handy calculator in your pocket, in your car, or even in a briefcase. Forget about using your phone, which is always on and offers more features at your fingertips. Warning, calculator will not work on a cloudy day. It's a brand new calculator.
We figured, working in finance, that you don't have a calculator, I'm sure.
I'm very grateful.
Okay. Well, thanks so much for joining us on Apple Farm Chatter. I guess, Travis, how can they learn more?
They can learn more about checking Apple Farm Service out by going to our website at applefarmservice.com, checking out any of our socials. We are on Facebook at Apple Farm Service and YouTube at Apple Farm Service. This podcast can be found wherever podcasts are.
All right. From everyone here at Apple Farm Chatter, we wish you a great growing season and try to stay cool out there while you're baling hay. Thanks for listening.
Thank you for listening to Apple Farm Chatter. If you haven't, subscribe today. Want more from Apple Farm Service? Like us on Facebook, follow us on TikTok, and check out our website, applefarmservice.com. Happy farming from your friends at Apple Farm Service and Apple Farm Chatter.